Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the first week of April, April 3rd through April 7th, where we'll talk about how to make money in the month of April. We'll review how the markets performed through March, and then we'll talk about strategies on how we can make money trading in April. How does April typically perform in the markets? What sectors, industries, etc., may present us with opportunities to make money trading in April? So let's get started. Welcome, Walter Lyons. Thank you for joining us for our live stream. Glad to see you. Hope you're doing well. So here's our Google document with our notes for part one of our weekly trading game plan for this week. This Google document is publicly accessible. Our notes for our weekly trading game plans contain links to bonus videos, all the tools that we use for our market analysis, our strategies, etc. You can find a link to this Google document in the description box below. We store our notes for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to these notes as well as notes from previous weekly trading game plans in that Google Drive folder, which you can also find a link to in the description box below. So again, we'll talk about this in more detail in our strategy section towards the end, but in the notes, you can find some links to some bonus videos where we ask ChatGPT, how do the stock markets perform in the month of April, and what are the best performing stock market sectors and industries in the month of April. So you can access those videos now via the links in our notes, and we will be publishing those short videos as soon as we're able. Welcome to Ricky Khan, Easy Mike. Glad to see you both in the live chat for our live stream today. Hope you all are doing well. Hope you did well in the month of March. So let's look at how the markets ended up on Friday, the last day of March. So it was end of month, end of quarter. And we'll talk in our strategy section too about some of the potential opportunities with the rollover of the month and the rollover from one quarter to the next. So we can see all the indices ended up quite dramatically. Well, I'll talk about some of the reasons I think that occurred when we look at the economic data. Again, also the end of month, end of quarter factors as well. As we see at the close, we had a significant positive market on close buy. See the majority, 76% advancing. It was about 50-50, new highs, new lows. We still, however, have 60-40 below the 50-day moving average and about 50-50 below the 200-day moving average. So under the covers, there's still a lot of weakness, and we see, the heat map was mostly green. So again, I'll talk about this in more detail, but in my humble opinion, a lot of this was irrational exuberance based on some of the economic data that we got. We see the FANG stocks, the mega tech FANG stocks, Tesla, Google, etc., and video all had major greens. The few reds, Micron, CBS, etc. Look at some of the news. First quarter rally, barely budged since last summer. So again, we'll talk about how the markets have been significantly range bound, bouncing up and down, and how we can make money trading that in the month of April and going ahead. China stocks staging a comeback. We'll talk about some of that, probably more so tomorrow. And the NASDAQ ends with the biggest gain since 2020. So again, we'll talk about this again, in my humble opinion, irrational exuberance into tech, particularly big mega cap tech, the FANG stocks, etc. See Mexico sees growth of 3%. We'll look at the futures of oil and natural gas, and we'll talk about kind of the trends we see in those. But we see crude oil broke above 75 after having bounced down below 70 at one point. Natural gas sitting in the low twos right now. Gold, as we'll see when we look at the futures, has been working on the resistance at 2,000. And we see all the futures for the indices are currently pointing, significantly green. See the Treasury significantly declined in yield. The yield curve still significantly inverted. We've seen, the dollar generally weaken, and we'll talk about, opportunities that all those trends may present for us. Okay, so let's look at the indices real quick. SPY, the S&P. So we'll see, it made this gap up, big green candle towards the end of the day. We can see this narrowing trend, these channels sitting pretty much, above its moving averages. So again, we may see some reversion to retest those moving averages. When it gets up to that upper trend line, again, I would expect, some rejection. But again, it's pretty much range bound at this point. So we'll zoom out, look at the weekly. Again, we see last week, very exuberant. Hasn't really tested the recent high, but we can see, it's pretty much been range bound, just oscillating to reach a steady state. We can see that the moving averages are converging. So again, I expect, similar range bound behavior, bouncing back and forth until we get some, major trend, major move, which I don't see happening anytime soon. So again, we want to be able to make money trading this type of range bound market. So look at the NASDAQ. And just a quick reminder, and I'll put up the banner, none of this is financial advice. We're not financial advisors. Everything in our videos and our content is all our personal opinion, my personal opinion, and none of it should be construed as financial advice. This is for education and entertainment purposes only. So we see the NASDAQ has made, a real strong run, significantly above its moving averages, broke above its previous high. Again, I wouldn't be surprised to get a retracement testing the moving averages. And I also wouldn't be surprised if we continue on this exuberant trend and retest the previous high. And I'll talk a little bit more about why I think we may well continue on this trend to test that previous high in the near term. Yeah, we'll talk about real estate when we get to sectors, industries, etc. We'll talk about real estate, REITs, etc. Sector rotation, as Easy Mike's pointing out. Let's look at the Dow sec. So again, the Dow had a big rally on Friday. Had a positive week after it had, made a significant low. It's sitting now above its moving average. Hasn't really tested the previous high, so I wouldn't be surprised, to see it continue to rally up, testing these previous highs. And then again, I think we're going to get some, possibly violent retracements to test these moving averages. But again, I expect all the indices to be pretty much flat, range bound, just oscillating back and forth. So we'll get these, violent rallies, violent retracements back. But again, overall, I think it's going to be range bound. Again, my opinion. Let's look at the IWM, the Russell. Can we say, the Russell had a major decline? Made a doji, pretty significant doji with a lot of volatility, and then rallied off that bottom. It, however, is sitting below its moving averages, so it's going to encounter some resistance. Did do the gap fill on there, which is, typical. So again, I think IWM, the Russell, is going to encounter resistance when it hits its moving averages, and maybe, may go back down to retest near that previous low. But before it may, eventually stage a breakout again. But Russell's been very flat, very low for quite a while. Look at the VIX. The VIX, has really been in major decline recently after the bank collapses, and we'll talk about strategies relative to the bank collapses. But after that kind of calmed down, the VIX is, major decline, retracing to its mean. We can see bottoms, below 20, somewhere in the 18. I think the bottom I've marked on the VIX is like 1706. So we'll talk more detail tomorrow about how we're playing this decline in the VIX and what we expect going forward. Okay, so let's look at the sectors, industries, etc. I think this again, since we're seeing, pretty much a range-bound flat market, I think this is where the opportunity is to make money trading in April and going forward until we get a real trend, either positive or negative in the markets. I think playing the sector rotations is again where the opportunity can be found to make money shorter term. And we're seeing a lot of these sector rotations. You'll notice on Friday, real estate, as Easy Mike pointed out, was one of the top performing, and for the month it was one of the lowest. For the quarter, it was kind of low in the middle. So again, we're seeing the sector rotation. We saw for the week, energy was the top performer, but on Friday we probably saw some profit taking in energy. See basic materials kind of moving up the list. It's had a good week, and probably some profit taking there as well. Technology, we see this, was top performer on Friday, but lower for the week, and it's been the top for the past month. So for the past month, real estate, energy, obviously financials were the worst performers, and we're seeing them make a rally up. Also for the quarter, so this was the end of first quarter. Obviously, financials were bad. Again, energy was the top performer last year, and we saw, probably a lot of profit taking, and now we're seeing a move, rotation back into energy, in my humble opinion. Um, so again, I'm going to recommend, and hopefully we'll have time to talk about how to play these sector rotations. But again, I would recommend watching this graph. This is the groups tab in FinBiz, and I'll show you some videos we have in more detail about how to use this groups tab in FinBiz. But I'm starting to watch this even more so during the day. And when you see money, see one of these sectors start to move up, says money's flowing into that sector. When you see it moving down, money's flowing out of that sector. And again, I expect, they're going to pour money into the lower performers, move it up the chain, and take money out of the top performers and move it down the chain. And this is going to occur on a daily, every couple day basis. So again, I think this is the opportunity of how to make money in the range bound market that we're in. Okay, let's look at the industries. And again, this is more detail within the sector. And again, I think this is really where the opportunity lies, is looking at, where's the money moving? Which of these industries is moving up? Where's the sector rotation going? We see hotel, REITs, a number of the REITs. We're at the top of the list, as Easy Mike pointed out. Again, I think we're seeing some distinction between the classes of real estate. We'll talk a little bit about that. And I think there's opportunities in these, as you see these REITs are moving up. We've talked about the sector rotation regularly, in and out of solar, in and out of aluminum, in and out of steel, in and out of coal. So, and we saw, in and out of uranium. I think that's a big opportunity because they've been rotating in and out of uranium. Again, we'll look at the resistance levels in gold and silver. I think, they're testing their resistance levels. They had a big run, and then they hit resistance, and we probably got some profit taking at that resistance level. So again, for the week, we saw uranium very positive, and then on Friday, it was probably some profit taking uranium, rotation out. Solar, very positive. It was really only healthcare down at the bottom. Everybody was pretty positive for the week. You see gold and silver had a real positive month. Semiconductors have had a run. And we'll talk in more detail tomorrow, probably, about our strategy for trading semiconductors. We see this, steel. There's been rotation in and out of steel, in and out of uranium, in and out of coal, in and out of aluminum. So we see aluminum for the month was very negative. See semiconductors were very positive for the quarter. So the worst performers for last quarter, you can see it's energy, real estate, coal. And again, I think there's some opportunity. We'll see some rotation out of the worst or into the worst performers and out of the best performers. So again, sector rotation, in my humble opinion, is the strategy to make money, at least in April, and until we get a trend, a stronger trend in the market. Yeah, we're going to talk about commercial real estate, and again, the distinguishment between different classes of real estate. Yep, coal. We've been talking again. It's a rotation, so it's really, in my humble opinion, it's worth watching this industry graph as well. We have a number of videos on how to use both the sectors and the industries, so you can see how to use the FinBiz Groups tab. Here's a link to one of our videos on how to use that in more detail, and then also to how to find individual stocks within a sector when you see it start moving. So now we'll talk about some of the economic data from the past week. And just a quick reminder, as this comes out, I typically snapshot it from investing.com and post it in the Surf the Markets report channel in our Discord. Our Discord's free to join. You can find an invite to our Discord in the description box below, and I'll put it up in the banner very quickly. And again, you can see as this data comes out, I quickly try to snapshot that data and post both the screenshot and the raw data in our Surf the Markets channel, so you can get that. We also have a feed from Market Watch Economy, so you get interpretations, news based on that data in the Surf the Markets channel in our Discord. So again, our Discord's free to join. Please join our Discord via the link in the description box below. Again, you'll get all this economic data, as well as we'll talk about earnings data and dividend hikes, etc. It's all in our Discord as well. So last week, not much. Monday, Tuesday, Wednesday, we got mortgage rates. You saw with the Treasury yields coming down, mortgage rates came down a little bit. I would expect, that's going to cause a very brief surge in home buying, those people waiting and expecting the mortgage rates to go back up to 7 or so, but that'll be short-lived. So again, we saw pending home sales bounce up a little bit on decreased mortgage rates. We see this major decline in oil inventories. Again, I've been talking for several weeks. I don't think this number is driving the price. I think it's much more technical because we saw then oil after it had declined below 70, bounced back up, and now it's back over 75. And again, I'll talk about where I think the range on oil is right now. We also saw gasoline inventories decrease significantly. And then Thursday, we got continuing jobless claims. This, again, was spurred part of the exuberant rally in the markets. It was a little bit higher than continuing was a little bit lower. Initial was a little bit higher than expected. So that says, okay, the job market might be weakening just a little bit. And the market interprets that as, oh, the Fed's going to have to, cut rates. I don't agree with that. I think it's just the start of a very long process, but we are seeing some things starting to roll over. The job market is slowly starting to roll over, as well as we'll see inflation. GDP, it was not negative, it's still positive. So again, I'll try to talk about this more in the future, when, if and when we might see a recession. But bottom line is it's not going to be officially anytime soon, because quarter 4 was still positive. We won't, get a final for quarter 1 until the next 3 months. So again, I don't expect us to officially be in a recession for, at least 6 months, if not 9 months, is my humble opinion. Core PCE, we'll see this data on Friday. Again, this was what's really spurred the exuberant rally, particularly in tech. Is it's really just one a decimal of a percentage point lower than expected. But again, it shows, the inflation has inflected downward, but it's not decreasing significantly quickly. Also, personal spending was down a little bit. So again, I think we're slowly rolling over. Inflation is slowly decreasing. You probably heard some of the Fed officials say, it's going to take quite a while for it to come down, reach their targets. See some deterioration in sentiment, and some decrease in expected inflation. So again, I think we're seeing the inflection, downward in the job market, downward in inflation. So things are headed in the right direction, but it's not moving very quickly. So I don't expect a major change in Fed policy. We'll talk in more detail about when their next meeting is, what we can expect as we get closer to that. We'll look at the calendar for last week, see if I missed anything. Also for next week, but just a quick reminder that the markets are closed next Friday for Good Friday. So we've got a 4-day trading week next week. And then, we'll talk about going into the long weekend of potential volatility play. So quickly see if I missed anything. We've got some auctions. Home prices, pretty much home prices are still up. Again, that's probably because the mortgage prices declined a little bit. Again, we see a decrease in oil stock. PCE, GDP data. Again, we're going to keep having, Fed officials come out. This was a little interesting. I hadn't seen them post this before, but it was a breakdown of the OPEC countries' production. And you can see they were pretty much in line. So, the OPEC countries are holding to their quota, is how I interpret that. Here's the PCE data, Michigan sentiment, Baker Hughes. Again, we're seeing a decrease in oil rigs. Again, with the decrease in oil price, oil companies are taking some of their rigs offline. That's going to decrease supply and should hold the price relatively stable. Again, I think it's range bound. Got manufacturing PMI and ISM on Monday. So that's again some recessionary and inflationary data. Factory orders, JOLT, so open jobs, they're expecting open jobs to decrease. If they don't, then that says the job market's still pretty strong. Again, ISM data. So again, more economic recessionary type data, and then we get jobless claims. And they're going to release payroll data, non-farm payrolls, employment data on Friday when the markets close. So again, in my humble opinion, this may contribute to increased volatility the following week, since they're releasing employment data on Friday when the markets close. Following Monday after Easter, we may see significant volatility if those numbers come in hotter than expected. So again, we still got earnings season. We're kind of wrapping up one earnings season and then starting up another earnings season. So you can see, who's reporting earnings this coming week by just hitting the earnings calendar in investing.com. I'll also show you in the market screen in Webull where you can see this. So again, there's still, some people reporting earnings, some biotech, some energy, etc. So keep an eye on that. Some food service, again, food. So again, keep an eye on that, see how that's going to affect. And then again, we're going to kick off a whole new earnings season again. So we start over. Okay, so the next FOMC, the next Fed meeting is not until the beginning of May. So all of April, we have no Fed meetings. We'll have Fed presidents out talking. Some will be hawkish, some will be more dovish, and that will cause a little bit of volatility. But since we don't have a major Fed meeting again, I expect the markets to kind of continue on their current path. Until we get to the next Fed meeting. There'll be a lot of speculation. Are they going to raise 25 points? Are they going to wait, go zero? Some of it may depend on the bank collapse issues. But, barring any significant news on the banks or very divergence from the expected values of some of this economic data, I expect the markets to continue on their current trend. Which is pretty much a rally. I think, again, we'll get some, potentially violent corrections back to test moving averages, retest, recent lows, etc. And then again, exuberant rallies, trying to test highs, etc. But pretty much range bound. So we want to be prepared to, test this up and down within the range. Again, just a reminder, we have an earnings report channel also in our Discord. So as companies report earnings, we get this news from Earnings News. And again, you can join our Discord for free. This gets posted, automatically as quickly as possible. So you can get that earnings data in our Discord as well. So now let me grab a drink a second and we'll jump over to the market screen in Webull. We'll look at how the markets ended up, the best performing industries, ETFs, etc. And let me catch up with the chat, see if I'm missing anything. Okay, here's the market screen for the online version of Webull. Again, you saw the ad. If you're not already using Webull, you can still get 12 free stocks. Again, you can see we use Webull for our market analysis, our due diligence, the majority of our trading. Another place you can see the earnings calendar as well as dividends and splits. It's in this calendar tab in the market screen of Webull. Again, we have videos about how to use this market screen. So again, you can see who's reporting before market on the third, second, after market close, etc. You see in the histogram of advancers to decliners, is much better than 2-to-1, not quite 3-to-1. The advances, the vast majority was very small. We have a small tail of significant advancers. Decliners, again, tail's very small. I expect, inflow in the NASDAQ, some outflow out of the NYSE, so industrials, Dow, etc. Again, the focus was on tech. They really want to run tech. So, even if the data's not much worse, they want to run tech. So that's kind of the trend. So opportunities to make money given that sentiment. So let's look at best performing industries for the week. Again, you see for the week, uranium was very positive. We saw Friday, it took a slight decline. I think, again, in the sector rotation, I think there's significant opportunity here. We'll talk tomorrow about how we're playing this sector rotation in and out of uranium. Mixed, pretty mixed. Transportation, a little positive. Electronic parts, a little positive. Again, we talked about this rotation into energy. Containers packaging, renewable energy, the rotation in and out of solar. Again, gold and silver have been very strong, slight decline in the last day or so. Coal, again, sector rotation in and out of coal. We'll talk about tomorrow how we're playing the rotation in and out of coal. And as Easy Mike pointed out, REITs, this is residential and commercial. Oil and gas, again, energy. Look at the ETFs. So I expect the indices to all be positive, small cap positive, Russell positive, NASDAQ, that's the leverage on NASDAQ positive. So pretty much up on all the indices right now. I would expect down on the VIX. Small cap bull, small cap Russell. So, at least towards the end of the day, they were focusing on small caps in the Russell. China's positive. Everything's pretty much green. Basic materials, a little bit of profit-taking retracement there. Everything, even financial services was very positive. So again, exuberant rally on Friday. Carbon, natural gas bounced up a little bit. Precious metals, natural gas. Zero extended duration, 25 years. So bonds, we'll see in the futures in a second. The flight to safety in the bonds. We'll also talk about how the bank collapse has had an impact on treasury prices, and what we can expect longer term in that area as well. Easy Mike says bond volume was higher than equity volume last week. Yeah, and I want to talk again, flight to safety, but also how this bank collapse in the banking system is having an effect on bonds and treasuries in particular. So let's look at the futures quick. So again, we see this, rallies in all the indices. NASDAQ broke out, exuberant rally. S&P hasn't quite, retested its previous high, but again, positive. And again, I expect these to generally continue until the next Fed meeting, unless, we have a major event in the bank collapse. I don't really expect any major changes. We may have some additional banks collapse, particularly over the weekend. So typically they do the change of banks over the weekend. So we might see some changes of ownership of banks over the weekend come Monday, but I don't expect the market to react overly negative to that, given that we're past the initial bank collapse fear. Russell, same thing, looks like it's broken out. It's got a long way to run. Europe up, Germany up. Again, you see the major decline in the VIX. That will continue to decline unless we get something to cause it. So here's oil. Again, we saw oil break down below 70. It bounced back pretty quick. Went up to 70. Went up to 75, quickly broke out, but you can see it's pretty much been range bound between, mostly 70 and 80. And we'll see if it breaks out of 75 and retests 80, or if it gets rejected from 75 and retests 70. But in general, in my humble opinion, I expect oil to be pretty much range bound between 70 and 80. It'd probably dip a little below 70, dip a little bit above 80. But again, unless we get some kind of major change, I expect this oscillation to continue. Plenty of opportunities to make money short term in those oscillations, but longer term, there isn't a strong trend to go long or short until something else develops. Very similarly with natural gas keeps trying to put in a bottom, so it's bouncing between about 2 and 3. Not really trending up or down at this point. You get the trend down and then it'll bounce back up, probably retest 3. But again, until we get some change in season, etc., I don't expect a major long-term trend either way. Again, my opinion. Gold, you see how it's testing this repeatedly, testing this resistance on 2000. Eventually I think it'll break out of 2000. This is part of the flight to safety, and also, people taking money out of the banks and putting them in other assets. We just talked about treasuries. One of the areas people are putting money in is gold, silver. They're putting in Bitcoin. I know. Um, but they're putting in gold, silver, and also treasuries. So we'll see that in treasuries. Um, the agricultural commodities been pretty volatile. You'd see they dipped down, bounced up, ran up. So there's opportunities in some of these oscillations when they hit extremes, and we're going to be focusing, looking at some of the opportunities in some of these agricultural commodities, and looking for opportunities in these bounces. Lumber went through a pretty significant decline. See sugar's breaking out at a high. So then we see the treasuries. Again, the treasury prices had declined a little bit, and then we got this, exuberant buying of treasuries. Again, this has been part of flight to safety. So when the fear of the bank collapse hit, people ran to treasuries, took money out of stocks, took money out of their bank accounts, out of their savings accounts, ran into treasuries, and also that's continuing. So initially, we saw the flight of money out of the regional banks into the big banks. Now I'm hearing, they're withdrawing out of the big banks and going into treasuries, gold, silver, etc. So that's kind of kept the price of treasuries up, kept the yields down. And again, I expect that to continue short term, but longer term, the yields on the treasuries need to go up to compensate for the Fed interest rate. We saw the dollar weaken a little bit, it's and then pretty much steady right now around 102 or so. Easy Mike says volumes are at its highest since 2009. Yeah, again, flight to safety. Again, you can make more in treasuries currently than you can in a savings account in a bank. So people are taking their money out of banks, putting it in treasuries. Again, that in some degree will exacerbate the stress on some of the banks. So again, we're going to talk more about the banking issue and where that might be headed as well. Okay, so let's talk about some of our strategies. Let's talk about making money trading in April. Again, you can hear the ChatGPT's answer to how do markets perform in the month of April and what are the best performing market sectors and industries via these links in the notes. So I'll leave that to you. I want to look at how April typically performs. So we typically look at this graph in Investopedia. It shows how the various months perform relative to one another. So we see how April tends to be even better than March. So we saw in a second, I want to see how March actually ended up. But we can see on average, March is up 1.2%, April's up 1.5%. So another reason that we can expect historically April to be a positive month. We can expect the indices in general to rally. But I think it's going to be driven by sector rotation. Then we see this sharp drop off into May. This is the sell in May and go away theme. And we'll talk about this more as we get towards the end of April and also going into May. And, what I expect to see in terms of that sell in May and go away theme. Then we see May slightly positive and June is typically negative until we get a bounce back in July, and then a dip for a couple months, and then a bounce back towards the end of the year. So again, April's typically a positive month. The average returns 1.5%. So we can expect, historically, April's even a little bit better than March. And so again, we can expect this upward trend to continue. So let's look at the performance of March. So again, you can find this link in the description box below, or in our notes, or just go to investing.com, go to the major indices. We can see performance. So we can see how they ended up for the month. So we can see S&P had a 3.2% positive. Nasdaq had very good month, 6.6%. Dow was up 0.8%. It was only the small caps, the Russell, that had a negative return, and we can see the decrease in the VIX. So year to date, all the indices are positive. VIX is declining. So, but it's down, from the previous year. So, again, positive so far this year, as we've been kind of talking about, kind of what we expect from this year. We expect this year to be positive, even if it's not technically in a bull market. Although I believe people are saying the NASDAQ technically is in a bull market right now. It's up 20% or more from its low. So again, we can expect, April historically is a good month. Again, in this video, you can hear some of the sectors and industries that they talk about may benefit from April. We'll also probably talk next week about more of the tax season and how that has a potential effect on the stock market as well, since we'll be approaching the tax deadline soon. So again, talking about the bank collapse and some of the potential effects, we've done a lot of previous work on this. We have a number of videos where we talked about the impacts and strategies and how to make money trading in this environment, how to keep safe, how to not get trapped, not get hurt in the fallout from this banking. Also, how your brokerage accounts are generally, have higher levels of insurance in a bank account. In fact, I talked to my mother, this week to see if she was pulling all her money out of her bag, and she was calm. So that tells me there's not that much public fear out there. But again, you have higher insurance in your brokerage account, and you can hear more details of that. Also, if you really feel compelled to trade the financial sector at this time, we have a video of how we would approach trading the financial sector. Also, and I did tell my mother the same thing, is, she is in a regional bank, and you don't know. They might close over the weekend, and they might be closed for days to a week, and just make sure that you've got the cash readily available, just in case, you can't get cash out of the bank for a few days. Again, they're generally insuring deposits on strategically important banks, whatever all that means. But as long, I don't see a major risk of people losing their deposits. You just might not be able to access them. And we saw that with Silicon Valley Bank in terms of companies being able to make payroll. They weren't able to make payroll for a period of time until that bank situation panned out. Let me grab a drink a second. I do want to talk about potential next shoes to drop in this bank collapse, financial crisis, and then we'll also talk about some other strategies of how to make money trading in April and going forward. Okay, I'm hearing a lot and thinking about what potentially could continue with this bank collapse. Again, we talked about that now there's an exodus of deposits out of the big banks into things like Treasury, gold, silver, etc. And there may be other regional banks that go under due to the inversion of the Treasury yield curve, and if they were exposed to that. Again, we saw, prices of treasuries declined even further. So that may put additional stress on some of those banks that, duration risk like Silicon Valley Bank got into. But in terms of the next shoes to drop, could potentially be commercial real estate, banks exposed to commercial real estate. So if they, loaned out and purchased to someone that purchased commercial real estate, particularly office real estate, they may be exposed. I've heard discussions that some of these, offices, they don't need as much. They're not occupied, given the exodus from cities, etc. And these people that took out the commercial real estate loans may just turn in the keys because they're at a loss, it's underwater, etc. And then the bank ends up getting stuck with that real estate, just like back in 2008 with residential real estate. So we're going to keep an eye and an ear out to see if that is the next shoe to drop in this financial crisis, and potentially what other banks may be exposed to commercial real estate risk. Again, I talked about sector rotations, how I really think that's the primary strategy we're going to focus on is these opportunities as they evolve during the day, when they're flowing money into a sector, out of a sector, etc. When they're flowing in, that's a momentum trade. When they're flowing out, look for a bottom. Again, we'll talk tomorrow about how we're looking to do that in the uranium and coal. We've talked about solar, etc. This market doesn't, suit my particular swing trading. I tend to be a longer term swing, looking for extremes to give us, upsize opportunities. So this particular range-bound choppy market doesn't particularly fit my trading style real well. I am trying to play these sector rotations, and we'll talk about that. But if you're a more nimble, shorter-term trader, there's plenty of opportunities in this range-bound sector rotation chop. You can see here's a whole series of videos we've done on the past on how to use the sector tracker, how to find groups and industries in FinViz, how to find individual stocks in those industries to take advantage of those sector rotations. Tomorrow we'll talk about dividend payers. So again, because this particular market does not, particularly suit my trading style, we've been focusing on dividend stocks, getting into dividend stocks that both pay a decent dividend as well as potential price appreciation. So tomorrow we'll look at potential opportunities with dividend payers, and we're also selling puts on stocks that we wouldn't mind owning. So we'll talk about our option strategy. Again, we'll review our puts ROIC, look for opportunities to sell puts. We are looking at trying to sell some puts against some particular stocks, and we'll look at those again tomorrow. You can hear more about our strategies via these links in the description box or in the notes here, and maybe in the description box as well. And we'll talk about those in more detail tomorrow. Welcome, the Crow. Glad to see you. Thank you for joining us. So I've got a couple minutes left. We can talk about any other topics, themes, etc. that you would like to. If you have any questions, again, got a couple minutes to answer any questions you might have. I'll check the chat. If I missed your question before, I apologize. Please throw it back up in the chat, and I'll try to answer your questions while we've got a few minutes. Just a reminder, you can always ask questions in our Discord. Walter just posted some interesting on the S&P and Beach Party. Beach Party tends to be the primary channel where people hang out. Again, you can find a link to our Discord in the description box below, and I'll put it up in the banner again. So join our Discord. We've got a great community of very helpful traders. Our goal is for everyone to succeed in their trading, and we're all here in the community to help each other out. Also invite your friends, share these videos with your friends and fellow traders, invite them to join our Discord. The more the merrier. The more people we have helping each other out, the more beneficial it is for the whole community. Also, we have a Facebook group. So if you'd rather ask questions in the Facebook group, do that, you can also contact us via our social media sites. All the links to our social media sites, our Discord, our Facebook group are on our homepage in the link section. Our homepage is beachbumtrading.com, bum without the U. So you can find links to all those, our trading platforms, the trading tools we use. You see FinBiz, investing.com, etc., the sector spiders. So also additional resources. So you can find everything, links to everything in the link section on our homepage. Okay. So again, if you have any questions, please feel free to follow up. We'll try to answer them. Please, tag us in the Discord, BeachBum Trading in the Discord, so I get notified of your question. Can try to respond as soon as I'm able. So, and we'll always try to respond to any questions as we're able. Easy Mike said he added Palladium. Yeah, we'll talk about Palladium and how we've been looking to play Palladium. It does look like it, took a bounce. Okay, so thank you all for joining us in the live chat. Hopefully you all come back for part 2 tomorrow at 10 a.m. Eastern, same bat time, same bat channel, and we'll talk about selecting our individual stocks to put on our top swing trading stock watch list for next week, April 3rd through April 7th. Again, as we discussed, we'll also talk about dividend payers. We'll review our ETF spreadsheet, look for various opportunities in various commodities and other categories. And also we'll talk about potential opportunities for selling puts using our puts ROIC spreadsheet. So hope to see you all again tomorrow, and enjoy the rest of your day. Thank you and have a great day.